Hello everybody, this is Henry. It's 7:54 a.m. It is June 30th, 2009. We're looking at the dollar CAD pair today, since we're going to get the monthly GDP figure out of Canada in about 8:30 a.m. That's about roughly 30 minutes from now. If we would take a look at the chart for the dollar CAD, look at the 4-hour chart. The Canadian dollar has been going on a weakening trend against the dollar. It has been losing strength since the 10th of June, and it has lost as much as 700 pips to hitting as high as 1.1642. And if we would look at the 1-hour chart, we can see for the last 1, 2, 3, 4 trading days that the USD CAD has been sort of indecisive and bound in a range. And if we would look at today's activity, we can see that the dollar CAD started the session at as high of 1568, and it gained against the dollar for about 54 pips. And right now we're at 115.23, and it looks like from the start of the session today we're seeing a little bit of Canadian strength. So with the news coming out in about 30 minutes, the GDP month-to-month figure is expected to be a negative 0.1%, and the previous number is actually a negative 0.3%. So we are expecting this number to come out negative. And with what's going on in the Canadian economy and the recent sentiment, combining the loss of crude oil prices, we could see a perfect recipe for a Canadian dollar to keep on losing strength against the US dollar. So it will be very interesting to watch the reaction of Canadian dollar after the news release. And what we're looking for is a 0.3% of deviation. Since we're expecting a negative 0.1% of release, if we get a negative 0.4%, then it is what we call a tradable deviation, and we can then see if the market will give us a chance to start buying USD CAD. And when we're buying the USD CAD pair, we're actually buying the USD and we're selling the CAD. So on a worse than expected number, at least a negative 0.4%, we want to buy USD CAD. Now if we get a better than expected number in the range of 0.2% positive, then what we'll do is we will sell the USD CAD, meaning we'll sell the USD and buy the Canadian dollar. But basically our plan is to wait for the number to come out and wait to see if we do get a tradable deviation, meaning the 0.3% deviation. If we do get the 0.3%, then we will evaluate the market at the time of the news release and see if there's follow through and see if we do get the proper retracement to enter the trade. We will not jump in to the market just because the number hits our deviation. It's always important to do an evaluation of the market right then and there before you jump into the market, because this is Forex trading and anything can happen. So it's better to look at the market to see what's going on and then make a trading decision at the time of trade. And most likely, because GDP is a strong indicator, if we do get a tradable deviation, market will start to move almost immediately in the direction of this price. And usually 80% of the time, the initial spike will push this currency to a level, and then profits will be quickly taken, and the gains will be retraced back, usually within the first 10 to 15 minutes, sometimes even faster. If traders, investors didn't have time to react, we could see this thing retrace back almost immediately, because actually not that many people got into the market. So that's what we'll be looking for, retracement, and then we will get into the market if everything looks good as far as risk to reward ratio, and also the expected impact for this news corresponds to the deviation. So in about 30 minutes we'll get the news release. I'll come back and we will trade this news live. In just about 1 minute we're gonna get the Canadian GDP number, so I'm gonna keep the mic open. We're seeing crude oil rebounding a little bit, gaining about 30 cents above the 71.30 handle, and the Canadian dollar right now has also paired some of its gains. We're seeing trading around the 115.35 area.
April GDP and May industrial product price and raw material price should be out in just a few seconds.
So let's stand by, it's coming out.
GDP minus 0.1% is in line with expectations. Product price minus 1.1%.
Okay, it is in line. So we get exactly as we expected.
Prior rise, 0.2 higher minus 0.3% for raw material price index. Citrix CYTR now following.
Okay. So basically with that taking place, it's a no trade right now, but I will still look at the market and see if there's a chance to get into the market. So stand by. Okay, since this is in line as expectation, market show no movement, no volatility. So I'm just gonna go ahead and sit this one out.